Is the United States really the place to be right now? Is that the last place, the only place left with a real positive yield for us to pick up in corporate credit markets?
Hi, John. Yes, we do think on a relative basis the U.S. bond market makes the most sense right now, but we do want to be cautious because the reality is that credit risk is increasing. There's a lot of corporate debt outstanding, and so it does make sense that investors are going into credit markets, but you want to be a lot more selective and defensive right now. The global economy is slowing, monetary policy has limits, and we're likely not going to pivot soon enough to fiscal policy. And so the reality is that risks have increased a lot, so credit investors need to be more defensive and selective.
And perhaps in the short to medium term, Mark, you've also got to be willing to underperform. And I'd love your insight on that dynamic over at Pimco right now. You've been defensive corporate credit. Corporate credit has been where the performance has been. How willing do you need to be to underperform in the near term to avoid some of the risks that you think are on the horizon?
So, John, we actually like our positioning. We're most constructive on non-agency mortgages. We still are constructive on the U.S. housing market, particularly in the red states. We're basically owning REITs, which will benefit from the strong consumer, which you talked about, as well as the low interest rates. And we like cable, telecom, and the tower business. So clearly, yes, we have had a defensive bias, but we think that makes sense, particularly when you look in the context of a slowing global economy and the extended trade war with China.